Hello traders, welcome to your daily market update for Wednesday the 22nd of April 2015, and overnight we've seen quite a lackluster trading session where the US dollar did run out of its momentum that we've seen for the last 2 days, and that is to be expected because we don't have a lot of economic data this week for the US dollar. So I believe that the US dollar is going to take a back seat now for the rest of the week. We don't have a lot of data. We do have housing sales tonight, and unless that's much better than the market anticipates or really worse, I don't think it's going to have a massive impact on the US dollar. Sure, it will affect it, and we will wait and see what happens tonight at the housing. But other than that, we don't have a lot of data coming out of the US. So the market is taking its views onto the Australian data, which we've had come out this morning. And we had a slightly better than expected CPI rating. It wasn't a great result, but it was better than what the market itself was anticipating. So ultimately, the Australian dollar has popped up a little higher, but I think it will be capped. And it will be capped by resistance levels that we do have in place, and I'll show you those in the technical. But we're going to look forward now to tomorrow's Chinese manufacturing, the PMI data. Now, if it comes in weak, that will weigh heavily on the Australian dollar. We haven't seen a good result coming out of China at the moment, and if it is below 50, well, then that does mean that it is in contraction territory, so their manufacturing isn't expanding and it isn't good for the Australian economy, so we'll keep an eye on that. The other main focus that we do have, although we do have the Bank of England's minutes, I don't think that that's going to have a big impact on the currency pair tonight, because ultimately the BOE is just going to say that they're going to leave rates on hold. The next move will probably be a rate hike, as we've all speculated for some time. However, it's not any time in the near future. And I've mentioned this, that the Bank of England is just in a holding pattern, and they're just waiting for global growth to get to a sustainable level that if they were to raise rates, it isn't actually going to start to hurt their economy too bad. They don't want to raise too soon and create an issue. So they're just in a holding pattern right now. So I think it's going to be a non-event. And that really leaves the market to be focusing on Greece and the games that are going on between Greece and the EU. And there are a lot of games that are going on, and that is going to affect the currency pair, where we've got a meeting on Friday where Greece will actually meet, and it's their chance to get the payment that they need for the bailout. And right now, the ECB's ELA program is really keeping the Greece banks afloat. It's their lifeline, and without it, I think that Greece would be heading towards a default. So they need this payment. However, there is a but. If there isn't a deal that is made, I think that the IMF will extend them or grant them an extension, and ultimately give them a little bit more time instead of instantly telling them that they've defaulted and potentially kicked out of the EU. Although I think the market will sell off on Friday if a deal isn't struck a little bit on the euro currency pairs, and that's because there is added risk that Greece is getting closer to an exit, and with that becomes inherent risk to the eurozone currency. So there's a lot to take in there, but that's the story, and that's where we're at, and we'll have to wait, and I'll talk more on it later in the week. But for now, the market is really just moving around on Greece promising that a deal can be struck, and then we've got the EU people coming out and saying that potentially that there won't be. Greece isn't playing the game. They're not doing what they're supposed to be doing. They agreed to do when they borrowed the money. So I'll keep you informed, but that's the long end of the story. We don't have a lot of data, so the markets will be headline driven, and they will be driven by technicals as well. So as you can see here on the US dollar index, we have run out of momentum here, and we do have an indecision candle on the daily on the US dollar index, and that's to be expected. We are still trading above the 50 moving average, and we have made a higher swing low. So everything's intact. It just means momentum is dried up, and that's due to lack of direction from economic data. And I think that's going to continue, as I said, for the rest of the week. But if we have a look here at the charts, we'll go through them one by one, and we'll talk a little bit more. we have seen a stall and really no movement in the New Zealand dollar versus the US dollar. And I think we are somewhat range bound here for a little while, and we don't have any other data to come out this week. So I don't think we're going to get too much excitement from the pair. The Australian dollar has bounced this morning, and that's due to the CPI data. However, once again, yesterday, we did have a lackluster session, and we just found support of 77 cents, and we've hovered around there until we got a little bit better than expected data. I believe that resistance levels up here will hold, and the market will turn its focus purely to the Chinese data tomorrow morning, as I mentioned. So keep an eye on that. Other than that, we'll be driven by commodities and the US dollar with the housing tonight on the back of this pair. Okay, so if we have a look at the euro, we've seen once again a lackluster pair. We went nowhere. We are trading above $1.07. And I think that it came off a little bit during the session, and that was due to the Greek discussions in the European session. And then we just had a little bit of a consolidation and a bounce, and that's where we're at. Right now, we've got a resistance at $1.08.5, and I think that there is risk to the downside, and I don't think we're going to breach above that. The Great British Pound has had a little bit of a bounce, but we are still trading below $1.50, and it's going to be up to tonight's minutes to dictate where we move to. If there is any surprise to the upside, well, then we could move above $1.50. And as you can see on the 4-hourly chart, we do have the short-term lows here. And we've got our $1.50 resistance level there. So I think we'll be trading within this band here tonight once again, and we'll keep an eye on the minutes. I'll be on Twitter, and I'll update you if there's anything major coming from that statement and the votes. Now, we've seen a bounce here in the US dollar versus the Canadian. Now, that's quite expected after such a big move. And as I mentioned, I think we could have run out of momentum at $1.23. If I go to the 4-hourly chart, you'll see that we have had a bounce. And we do have here a candle formation signaling that we have found resistance in the short term at $1.23. And I think that's actually going to hold, and we should continue to see it to the downside. But we'll keep an eye on the US dollar, and we'll keep an eye on oil. Actually, I'll duck over to oil right now, give you a quick look, and I'll have to do the charts for you. And as you can see here on the 4-hourly chart, oil continues to bounce off $1.55. And if it bounces and moves higher, well, then we will see the US dollar versus the Canadian dollar continue to fall. I'm actually keeping an eye tonight on oil to see if this does hold and we do move higher. This is the support level. If I zoom out to the daily, I spoke about the W pattern in oil, and then we did have the official breakout here. Well, we've come back and tested the back of that. So once resistance has now become support on oil, and I think we could move to some higher prices in the near term. So it's something to keep an eye on. It's not a definite yet, but it's something that I'll be focusing on myself. And with trading that, if you don't want to trade oil, you can actually get really good exposure of oil and the direction through the US dollar versus the CAD, and we should continue to see this sell-off should we continue to see support in oil. The US dollar versus the Japanese yen has had a bounce. Now this bounce is probably surprising to most because we didn't get this size of a bounce in the US dollar index. Well, the reason for such a large bounce in the US dollar versus the Japanese yen is US bonds have settled and have become a little bit more optimistic for the future of the US economy. So the movement here is due to the bond market last night. So it does pay to keep an eye on bond markets. Perhaps in the future I'll do an educational video to educate everybody exactly how bonds affects the currency market. Well, there's the charts for today. And as you can see, there isn't a lot in the market. So I'll be looking for scalping opportunities. I'll be keeping an eye on oil and the US dollar index, of course. And I will be following the minutes, and I'll be on Twitter. So hopefully I can provide you some commentary there. And don't forget to sign up to trade with me in May, where we'll be trading a live account. I'll be providing you all the trades via Twitter. You'll also a private Twitter feed, and you'll also get access to the trading account so you can see every trading order. And I will be giving a webinar to all those traders on Wednesday the 28th, and we'll be educating you on every one of my trading strategies, as well as my equity management rules and how we'll be trading together throughout the remainder of the month, where I'll be giving 2 daily live webinars where I'll be talking to you live before every trading session about all the trading opportunities that I'm looking for in a lot more detail than I give in these videos. This is just a high level market wrap up for everybody. Well, I'll be talking to everybody tomorrow, so until then, trade well.